First, they ignore you. Bunch of nerds and geeks playing with your magic internet money, children, go, whatever. $1 billion leaves the banks. Who cares, right? Then 2016 to 21, then they laugh at you. Bunch of nerds and geeks playing with your magic internet money, $10 billion? Pocket change, kid stuff. Then they fight you. 2022 to 2027, that's for now, okay? We're in the then they fight you phase. $100 billion? Now we got a fucking problem, all right? You collectively have to go away.
Mark Yusko, the founder, chief investment officer and managing director of Morgan Creek Capital Management, an investment management firm that advises pension funds, endowments, and wealthy individuals, has reacted to the continued regulatory onslaught on crypto-related firms by U.S. regulators. Earlier in the week, the U.S. Securities and Exchange Commission, SEC, launched lawsuits against crypto giants Binance and Coinbase. The regulator is accusing both firms of regulatory infringements and acting as unregistered brokers. According to SEC Chair Gary Gensler, Binance, the world's largest cryptocurrency exchange, its U.S.-based affiliates and founder Changpeng Zhao are facing 13 charges for allegedly engaging in a web of deception, conflicts of interests, lack of disclosure, and calculated evasion of the law. The major charge against Binance concerns its alleged commingling of billions of dollars of customer funds, an allegation the exchange has repeatedly denied. The SEC is also requesting an emergency order from the courts to seize assets held by Binance US. The regulator is also accusing US-based exchange Coinbase of functioning as an unregistered broker and exchange. It alleges that Coinbase's flagship services, prime brokerage, exchange, and staking programs violate securities regulations. According to Mark Yusko, the Now They Fight You phase is in full swing, and the SEC is just trying to stunt the growth of the cryptocurrency industry in the United States. While the regulator says its actions are on behalf of crypto investors and digital asset holders, Yusko believes they are only doing the dirty work of the traditional finance industry, which is understandably threatened by the younger and far more efficient crypto industry. During a recent fireside chat with Felix Hartmann, the veteran hedge fund manager discusses what he describes as the then they fight you phase and what we can expect as the banking industry struggles harder to delay the inevitable. We will now bring you clips from the insightful discussion. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
We never had it, so we didn't lose it. It was really never there, and it's not unusual for it not to be there because we're so early. If you go back in the history of any market, right? Whether it was barter markets from 2,000 years ago or a few hundred years ago, to the first stock markets around the world, to any market, the bad people will show up. And you mentioned leaders, right? To me, there were a couple people you mentioned who were actually leaders, and then there were criminals. Bad people doing bad things. Yes, they became large, in terms of billions of dollars, but they were just bad people doing bad things and stealing. And that's been going on forever, right? It's called bucket shops for a reason, called boiler rooms for a reason, savings and loan crisis, bad people stealing. And the response from the regulators is always the same. Comes down hard. That's why I said on that clip, they're going to punish crypto. But I think that was the plan, right? I think all along that the banking industry does not want to be disrupted. Just like I think you mentioned earlier today, we're sitting in this town. There's a law. Everyone's heard the term red flagging, right? We've all heard that term. Anyone know where it comes from? Anyone know the story? Okay, when the horseless carriage was invented, the horse and buggy lobby, I guess it wasn't a lobby back then, it was just the horse and buggy industry, paid the commissioners of this great town to pass a law that made, if you had a horseless carriage, you had to pay a human to walk in front of it with a red flag to warn the other people that you were coming. Anyone ever seen that in real life? No, you've never seen that. That was a stupid law, but it actually existed for a short period of time because the incumbent didn't want to get disrupted by the better technology. When the airplane came out, my grandfather-in-law left his safe job at the train company to go work for American Airlines, and his parents were horrified. And the train companies passed out pamphlets outside his little place in Tulsa, Oklahoma, saying that if you got on an airplane, you die because your body would cave in on itself when you went over a certain miles per hour. I flew on an airplane today. I'm okay. It worked out just fine. But that's what's happening with banks right now. 2022 to 2027, that's for now, okay? We're in the then they fight you phase. $100 billion? Now we got a fucking problem, all right? You collectively have to go away. Well, how are we gonna do that? Well, the banks are gonna pay people, lobbying, fancy word for corruption, and they are going to assert their influence through regulatory change or regulatory arbitrage or regulatory pressure or just simply putting people out of business. And you talked about the just price to get an audit. Does it make sense? Did the audits get better? Did they get more efficient? No, but they got 7 times more expensive. That is a form of repression. And, take banking. What did Signature Bank do? Was Signature Bank a crypto bank? You freaking kidding me? Have you looked at their balance sheet? It's real estate loans that are all going to zero because they, haven't even been in an office building lately. There's no people in it. So that's why Signature Bank had a problem. It's not a crypto bank, but it got taken over a weekend with no warning because it was quote unquote a crypto bank. And Barney Frank said they wanted to send a message to crypto that we are serious. We're going to shut down this bank with no real reason other than they could because it had this much crypto deposits relative to its deposit base.
With all the drama with the SEC, Binance US has issued a statement for users via its official Twitter account. The tweet reads, "The SEC has taken to using extremely aggressive and intimidating tactics in its pursuit of an ideological campaign against the American digital asset industry. Binance US and our business partners have not been spared in the use of these tactics, which has created challenges for the banks with whom we work. As a result, in an effort to protect our customers and platform, today we are suspending US deposits and notifying customers that our banking partners are preparing to pause fiat, USD, withdrawal channels as early as June 13, 2023. We encourage customers to take appropriate action with their USD." In its statement, the exchange also reiterated earlier statements from Zhao that all customer funds are safe. "To be clear, we maintain one-to-one reserves for all customer assets," it noted. "Any downtime in processing withdrawals may be the result of elevated volumes and weekend bank closures. Moreover, trading, staking, deposits, and withdrawals in crypto remain fully operational. While we remain open to a productive compromise that enables a thriving digital asset marketplace in America, Binance US will continue to vigorously defend ourselves, our customers, and industry against the meritless attacks of the SEC." Let's get back to Yusko's interview as he discusses how he believes all this will play out.
Then we go to the whole next level of, okay, if businesses are going to embrace this technology, which is as inevitable as flying on an airplane or driving in a horse's carriage, there is zero chance that all of the financial industry that we all take for granted today, that's been a great run for the banks for 800 years, since the Medicis and the Rothschilds, there is zero chance that 100% of that is not going to be on blockchains. It's as inevitable as air travel. 100% it's going to be on blockchains. It's not going to be in centralized databases. It's not going to be Visa today. If you used a Visa card today, it ran on COBOL. It runs on a mainframe computer written in COBOL. I'm asking the guy at Visa, I said, well, isn't it kind of a problem? He says, yeah, but it's kind of a moat because no one knows how to hack it. But when it breaks, we literally have to put a light on to Sunnyvale Retirement Home and get some 80-year-old to come fix it. And he's not joking because my 85-year-old dad can still code COBOL. None of you can.
Mine too.
Okay? And so that's the reality that is coming. But look, the banks don't want this to go away. For 800 years, they've had this amazing run. In the old days, I lent you money. I wrote down on my ledger, Felix owes me $100. He comes back, pay me 110. Oh, Felix, it says 200. You owe me 220. He had to trust me. He had to trust. So the Medicis, 800 years ago, said, no. Felix, you keep a ledger. Mark, you keep a ledger, and we, the benevolent Medicis, for a small fee, will decide that the ledgers match. Dual entry accounting. But the Medicis, I'm unscrupulous. I could pay them a little something, something. Felix comes back, pay me 110. They're like, Mark's book says 200, but my book says 100. I'm sorry. Mark's book is you got to trust us. We're the Medicis. So that now we don't have to trust anybody because we have truth. Blockchains are truth. And with truth, 7 trillion. Okay, come on, y'all. Trillion. The T word. See, we've been anesthetized to how big a trillion is. Lock these doors. And it's been going a long time, by the way, okay? And I'm going to miss my flight. But a trillion is I got to lock these doors. Y'all got to sit here and listen to us nanner on, okay, for 31,710 years. And we got to come up with a way to spend $1 every second. $1 a second for 31,710 years is 1 trillion. So 7 of those babies are wasted every single year. And I say wasted, meaning that is the rent that's being extracted by the banking system, the Medicis and the Rothschilds. You guys know this? Single family, the Rothschild family. Now, it's a big family, don't get me wrong. Big family. Has the same wealth as the bottom 3/4 of the people on this planet. One family, 3/4 of the people. So the banking industry is a very, very profitable business. And it is at risk, right? The same way that air travel was at risk or, horse and buggy.
Meanwhile, John Reed Stark, founder and former chief of the Office of Internet Enforcement of the U.S. Securities and Exchange Commission, SEC, has cryptocurrency investors to get their digital assets off exchanges as the regulatory siege on the industry is only just beginning. His tweet reads, "Get out of crypto platforms now, I can't say it any plainer. Having worked as an attorney in the SEC Enforcement Division for almost 20 years, including 11 years as chief of the SEC Office of Internet Enforcement, I believe that we now know for certain that crypto trading platforms are under a U.S. regulatory/law enforcement siege, which has only just begun." Stark also stated that as an outspoken and dedicated SEC critic with no stake in the cryptoverse, he is 100% independent, objective, and neutral. As a cryptocurrency investor, do you think it's time to exit the exchanges? Please drop your replies as well as your comments on Yusko's assessment of the situation in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.